Hi, everyone. Sean Gilliam here with Location Real Estate. Welcome to another episode of my podcast, Real Estate on the Front Range. This is a market update for January, which effectively I'm just looking at how 2024 wrapped up, the latest data from December that we have to close out the year. And then also I'm going to highlight some predictions for 2025. We'll look at some of the predictions for housing sales as well as mortgage interest rates. So stay tuned and we'll get into the data. Hi, everyone. Welcome to Real Estate on the Front Range, my podcast where I cover all things real estate here on the Front Range of Northern Colorado. Join me to get market updates, tips, and information on relevant topics to make sure you are fully informed before you buy and sell your next home. This is Sean Gilliam, your host, and I look forward to you joining me on your favorite podcast for the latest episodes. All right, thanks for staying tuned. Let's go ahead and look at the year-over-year data for Boulder County. You can see that compared to December of 2024, there was more activity compared to 2023. New listings are up 4.7% at 111. Pending sales are up 2.7% at 153. Closed sales are up 27.3%. That's a significant bump at 233. Our days on market until sale stayed the same at 80, and that's 80 days from the time a home gets listed until it goes under contract. Median sales price is $858,500. That's up 10.3%. And our average sales price for Boulder County was $997,547, and that's up 5.8%. Percent of list price received remained the same compared to last year at 97.4%. And the inventory of homes for sale was up almost 11% at 467. Our month supply of inventory stayed the same at 1.9. And that is the activity for Boulder County. We just, year over year, there was more activity this December than last December. Now we'll jump over to Larimer County. New listings up 12.2% at 212. Pending sales up 22.2%. That's a significant bump at 264. And closed sales were up 36.3%. Also a very significant change at 353. So Larimer County saw a significant amount of activity compared to last year at this time. Days on market until sale was 81. That's up 15.7%. Median sales price up 4.6% at $575,475. And the average sales price was just down a smidge, down 1.6% at $659,466. Percent of list price received was roughly the same. It was up 0.2% at 98.4%. And again, that's the percentage that a seller gets compared to the original list price. The home closes about 98.4% below that on average. Inventory of homes for sale is up 13.7%. at 755, and the month supply of inventory is up 10.5% at 2.1. We'll jump over to Weld County. Also a pretty active December for Weld County, similar to Boulder and Larimer counties. New listings up 38%. That's a big change. That's at 338 new listings. Pending sales up almost 14% at 345. And closed sales is up 11.5% at 350. The days on market until sale is also fairly high. It's up 2.8% compared to last year, but it's 74 days on the market before a home goes under contract on average. Our median sales price for Weld County was up 6.3% at $531,200, and our average sales price was up 5% at $582,221. The percent of list price received stayed the same at 99%. So sellers got closer to their original list price on average for the sale of their home compared to Larimer and Boulder counties. So, and I think part of that is because it's a lower price market typically, and buyers are willing to come to the table. More buyers were eager to come to the table to buy a home because they're more affordable compared to Larimer and Boulder counties. Inventory of homes for sale was up 27.5% at 1,012 homes for sale. And the month supply of inventory jumped up 19% compared to last year at 2.5. And the month supply of inventory, just as a reminder, is if we were to stop listing new homes and just sell all the current inventory at the rate at which they're selling, it would take 2.5 months basically to clear out our current inventory. So that's the data for Boulder, Larimer, and Weld counties. All right, let's go ahead and take a look at the month over month data. We saw that we had a more active December in 2024 compared to 2023. But let's just see how the data is stacking up here month over month across 3 years, just to give you an idea of how the market is trending. New listings, even though it was more active last year, we definitely see the typical seasonal trend trending downward. We look back here in 2023, the same thing. So that's typical. The influence of the election as well as higher interest rates certainly play into that as well. But you can see that the difference isn't terribly dramatic. It's pretty indicative of seasonal changes. Sales price. If we look at the average sales price, that's kind of moving sideways overall. Not a huge change. We did see a bit of a drop in November or from November to December for Boulder County, but otherwise not a huge change. Some people were concerned that there'd be a market crash with the way things are going with affordability, especially influenced by those higher interest rates. And it hasn't resulted in that. We've seen some pockets where we're seeing fairly significant price reductions, but it's not causing an overall downward trend in home values. So again, this is at the county level. In your specific area, that might be different. When we look at homes for sale, that's trending downward. Again, that's pretty typical. Look at here, September, and then as you get into December, it starts to move downward, even January and February, but then it picks up again for the spring. So we should expect to see that happen. If you've watched some of my other episodes recently, when we look at election cycles, anytime there's a major presidential election, 9 out of the last 11 elections, regardless of who won, didn't matter what party it was or their financial policies or whatever, that following 4 or 5 months into the spring was a very robust market. So compared to other times. So that's what we're hoping for, and we should see some more market activity this year. Let's see. Let's look at percent of original list price received. We see that kind of mildly trending downward. That's indicative of homes staying on the market longer, as I pointed out, and the affordability factors. So slowly but surely, we're seeing that buyers are having more negotiating power when they write offers on properties, because sellers, as homes stay on the market longer, they're getting more motivated to sell, and they're willing to meet you at the table and give you a more advantageous offer. So, or response to your offer. If we look at the average, we kind of see the same trend. It's kind of sideways, but it's indicative of the same data. When we look at days on market until sale, that's trending upward. Again, affordability is a factor. Interest rates are a factor. To some degree, some people pulled out of the market because of the election, and they're just there's a lot of people doing a wait and see right now. A lot of my clients, they're kind of wondering when they want to jump out. So, but I think we're going to see some more activity here in the spring. So we'll see as we'll probably see those numbers start to trend back downward. But for now, the days on market is up here, upwards of 80 for Boulder County, 81 for Larimer, and 74 for Weld. And then our month supply of inventory is trending downward. Part of that is related to the fact that some people just withdraw their home from the market if it doesn't sell, especially if it's been on for a while, and they're going to give it another shot in the spring when typically we have a more active market. And some of that decrease is related to homes that are selling. We saw an increase in closed sales year over year in December in all 3 counties that we just reviewed. So there's a few contributing factors, and it's seasonal too. We see that happen. This number trends downward as well when we get into the winter months. So that is a month over month data. I'm going to highlight some market forecasts for 2025 here in a second. So stay tuned for that, and I'll pull that up. All right, now I'm going to take a look at market predictions for 2025. I'm just going to highlight some national data from Zillow.com and some other major organizations. Just to get an idea, I'm going to take a look at mortgage interest rate predictions as well as home value appreciation, so you can see what the the overall hope for the year is. We'll see if it happens, and give you an idea of what you might expect if you're trying to plan ahead to see if you do want to buy a home this year or sell a home. So I should say that I also put a podcast episode together where I cover this more in depth and give some more information about our local economy based on data that the Lead School of Business puts out from CU here in Boulder. So you'll get a link to that. However, I communicate this information to you. It'll be on my YouTube channel, what have you. So you can take a look at that if you want more detailed information. But for our purposes, I'm just going to highlight what I see from some of these major organizations. So I'll start with Zillow. They forecast that housing prices will experience moderate growth. Interest rates will ease somewhat, but will experience volatility, and there will be a trend toward buying smaller houses. That's mainly because of the affordability issue. So we're starting to see a trend where people are just buying homes that are at the lower price point, which tend to be smaller homes. We're also, to some degree, seeing multi-generational homes. And so people are buying homes that might have a granny flat or an in-law unit, whatever you want to call it, just because for affordability reasons, people are taking in their more senior aged parents, or their kids can't afford to buy a home in the market that they're in, and so they're living in the same house. And so it's a good option for people in certain circumstances. And so I suspect we'll see a continued trend, a growth in that trend. Back to the predictions, Realtor.com predicts that home values will rise by 3.7% for 2025. And they also forecast that mortgage interest rates will be volatile in the first part of the year, but will stabilize down to about 6.2% or thereabout by year's end. So similar forecast as some of the others, as we'll see. The National Association of Realtors, they forecast that rates will stabilize in the low 6% range by the end of 2025, and that home values will rise by about 2% throughout this year. So in the ballpark. Not a huge amount of appreciation, but still there's upward pressure on prices, which is good for everybody. Redfin predicts that home values will rise by 4% and mortgage rates will stay close to 7%. And so a little bit higher as far as the interest rate. We were at 7.25% earlier this week. I'll check out in a second. As of yesterday, at the end of day, it was 7.06%. So in the last couple of days, we saw a pretty significant drop. But hopefully we'll get down into the sixes. I'm hoping this gentleman here, Logan Motasami, if I pronounce his name correctly, he's the lead analyst at Housing Wire. He forecasts that interest rates will range from about 5.75% to 7.25% for 2025. Like I said, we were just at 7.25%. So hopefully we're going to move in the right direction. And as I said before, if we get below 6%, I think we're going to see a significant amount of activity on the buyer side of things. We're going to see a lot of buyers come back to the market. And I think that will motivate a lot of sellers too to put their home on the market because the buyer pool just increased and they have a better chance of selling their home faster and at a higher price. So those are the predictions for what's going to happen on a national level. If you watch my podcast on the more in-depth market forecasts, we should see similar data here in Northern Colorado. One thing we have working against us is compared to other parts of the country, affordability is more of an issue here, just because we saw the highest home price increases during the pandemic compared to other parts of the country. So that will remain a headwind throughout 2025. That will, or if those mortgage interest rates get down to the low sixes and even into the fives, that will ease the burden for a lot of people. And I think we'll see more activity on the market. So hope this is helpful. If you have questions, don't hesitate to get in touch. You can reach me here at 970-313-6706. And also, if you want to subscribe to my YouTube channel, you can get notifications on when I put out new content and updates on the market and all that kind of thing. So I look forward to talking to you soon. Take care.